I want to start about asking about Brazil. Ana Botín has been very bullish with Bloomberg on the country. Brazil profit was actually down. It was, to be fair, mainly due to currency volatility. How confident are you that the new president in Brazil can pull the country out of its economic quagmire and therefore boost your profits there as well?
Hello, good morning. Well, the new president was supported by a great majority of Brazilians. He got more than 10 million votes above the other candidate. Markets have recovered in recent weeks as they are anticipating that economic policies will be orthodox. Our business continues to grow very well and profit increased double digits, excluding the currency impact that you just referred to. We are really positive about the business in Brazil. We need to wait and see what the new cabinet is going to be and what the new policies are, how they're going to be actually defined. But the overall market consensus is that the outlook for Brazil is very positive indeed.
Jose, good morning. It's Manis. So you've done it. You've got this capital build up, 11.11%. Good man yourself, you and the team. 31 bips on the capital. Does this change does this set the stage for possibly a higher dividend payout next year? What do you reckon on the capital build versus dividends?
Well, our target is to continue building capital. We set the target to be at 11% or above at year-end 2018. We are already there. But at the same time, we believe that current conditions recommend having a higher capital than just 11%. So our model creates capital. It builds capital, and that's our target at least for a few quarters. So the dividend policy is set each year by the annual shareholders meeting, and it was set already for this year. I think it's very premature, but again, our goal continues to be to build capital.
Interesting. Does that mean not raising the dividend next year then, Jose?
No, that will be decided by the shareholders meeting. No, I'm saying the dividend policy was set for this year, and it will be announced for next year at the annual shareholders meeting. We've been raising dividends in the last few years, while at the same time we've been able to build capital. So I think both are completely compatible.
Can I ask you about the UK? Nera and I caught up with Jeff Staley last week. He's hard Brexit ready. How hard Brexit ready is Santander? I asked you that because S&P are warning about a moderate recession. What would a moderate recession do to Santander in the UK on a hard Brexit?
Well, I don't think anyone expected negotiations to be easy, and that has proven to be the case. We talked about this last quarter. From our perspective, our focus is on making sure that we are well placed to support our customers, and indeed, that is what we are doing. Obviously, there is uncertainty about Brexit. The economy this year is expected to grow 1.3%, 1.4%. On the back of that, you saw our profits in the third quarter were very, very strong. A moderate recession, I think we can definitely cope with that. The type of business we have in the UK is very strong, is very resilient. But again, I don't think that's the most likely scenario. The most likely scenario is a continuation of a growth rate in line with what we are going to see in 18.
Jose, profit in Spain almost tripled, but I have a specific question I want to ask because it has affected the share price. The Spanish Supreme Court due to review a ruling establishing that banks must pay an equivalent of stamp duty and not the customer. What calculations have you made about costs if the court's plenary decides that the ruling is retroactive?
Well, the Supreme Court is expected to clarify its final stance in the next few days. For us, it's essential that courts, administrations, banks, customers get clarity as soon as possible what the outcome is so we can continue to conduct business. In terms of retroactivity, we don't see any reason to expect retroactivity. Banks haven't charged customers a single euro for the tax. That's been discussed. It was paid by customers to the administration. If the Supreme Court rules that from now on banks must pay the tax instead of customers, we will, of course, accept the ruling, obviously, but it will impact the cost of mortgages, and we will have to see how to address this impact.